Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Are your Goodwill donations tax deductible? The short answer is yes, but it's not as simple as just dropping off a bag of old clothes and expecting a check from the government. Let's break down exactly what you need to do to make sure your generosity can also benefit you at tax time. The single most important factor is whether you itemize your deductions on your tax return. Most Americans take the standard deduction, which is a set dollar amount you can subtract from your income. If you take the standard deduction, you cannot separately deduct your charitable contributions to Goodwill. You only get a tax benefit if your total itemized deductions, which include things like mortgage interest, state and local taxes, and charitable gifts, add up to more than the standard deduction amount for your filing status. Since the standard deduction is quite high, many people find it's not worth it to itemize. But if you do itemize, your Goodwill donations can absolutely help lower your tax bill. The first requirement is that Goodwill is a qualified 501(c)(3) organization, which it is, so you're clear on that front. Next, you can only deduct the fair market value of the items you donate, not what you originally paid for them. Fair market value is what a willing buyer would pay for those used items today. So, that designer jacket you bought for $300 might only have a fair market value of $25 now. A good rule of thumb is to think about what you'd see it priced for inside the Goodwill store itself. You must keep records to prove your donation. For any non-cash donation, always get a receipt from the Goodwill donation attendant. Even if it's just a blank slip, it's your proof of the date and location of your donation. For your own records, take photos of what you're donating and create a detailed list of each item and its estimated fair market value. If your total non-cash donations for the year are less than $250, that receipt and your personal list are usually enough. If your donation to Goodwill in a single drop-off is worth between $250 and $500, you need a more formal receipt from them, called a contemporaneous written acknowledgement, that describes the goods. If your non-cash donations for the year exceed $500, you must fill out and attach IRS Form 8283 to your tax return. So to recap, you must itemize your deductions, the items must be in at least good used condition, you must value them at their current fair market value, and you absolutely must keep detailed records and get a receipt every single time. It takes a little extra work, but correctly documenting your donations ensures you can get the tax benefit you're entitled to for supporting a great cause. Thanks so much for watching. If this video helped you understand the rules, please give it a thumbs up and consider subscribing.